Hi, Tim Bigham back again this week for Traders Exclusive, and some news coming out tomorrow from the non-farm payroll. Certainly somewhat muted, giving on what's going on in Syria with the G20 meetings, some of the rumblings coming out of Russia, to say the least. China now joining in the fray, so some of those kind of concerns rearing their head. And let's not forget, in all of this, that the yield on the 10-year Treasury is approaching 3%. Not too long ago, we were looking at that yield below 2%. So we've had this big run up in yields with that tapering talk, kind of ratcheting yields higher across the whole complex. So, both the short end and the belly and the long end feeling the effects of that. So, with the 10-year right around 3%, stocks not comparatively as attractive, certainly on a yield basis. And given the fact that, revenue growth this year has been basically flat, earnings growth has been up tepidly about 3%, mostly by stock buybacks, kind of manufacturing that, earnings growth. PEs have been stretched here, given the fact that the market's up, anywhere from 12 to 15% this year. So valuation's no longer cheap. VIX back below 16. I'm still looking for really that kind of range-bound market, 1,700 to the upside on the S&Ps, 1,550 to the downside. Continue to be tactical and nimble. Now not only selling out of the money call spreads around that 1,700 level and now the money put spreads around that 1,550 level, but also tactically on rallies, buying some puts. I kind of like short-term trading in this more choppy traders market. So on rallies, taking a counter-trend kind of bearish position by buying some puts, trimming out on a pullback, and conversely, if we do have a dip down, buying some calls on dips, down towards that, 1620 level. So I will look to really stay nimble, add in that strategy going forward. Again, we're leaving the turn of the month period. We talked about it last time, where the first three trading days and the last three trading days of the prior month have comprised since 1990 over 100%, basically all plus a little bit more of the move in the S&P. So we're getting away from that normally very bullish period. So I really look to kind of have stocks stuck in the mud here, and going forward, again, looking at those higher beta names as ones where I'm attacking even more aggressively. Tesla especially, I'm looking at the price action on a technical basis. The stock has really had some trouble going through that 170 level. The fact that implied volatility, fancy way to say, the price of options, is at the lowest level we've really seen in well over a year, certainly since, this monster move has begun. I'm just buying some cheap out of the money puts and looking for what I term that bad hair day, where, I look for maybe the stock to be down, 15, 20 points, a 10 to 12% down move, once the Messiah complex maybe has left the building on Tesla. If not, I'm buying some comparatively inexpensive options. I always have the room I'm buying out in September and October regular. I have a couple weeklies to hedge against that if need be. So another name would be Green Mountain. We talked about that last week as well. These, heavily shorted high beta names have really been up strongly this year. I think, they will be the first to fall here, and certainly on a valuation basis, a lot of these names are not even close to being justified. So until next week, this is Tim Bigham. As always, keep those position sizes in place. In a market like this, where basically anything can happen on a moment's notice, stay nimble, position size accordingly, and make sure you take care of your risks. Take care. Bye-bye now.